we don't know how long we're going to have to wait for the price of uranium to respond. And so in the meantime, we would like to buy something at a discount to its asset value that also pays us to wait. And that opportunity is Kazatomprom. And there isn't another opportunity like it at the moment in the uranium space.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com. Greetings and welcome back to Mining Stock Education. I am Bill Powers, and today we're going to be engaging a topic that we haven't engaged that much in the past few months, that being uranium. Uranium in the past few years has reached a low of $18. Right now it's a little above $25 per pound, but that's far below what the average miner worldwide needs to really be profitable producing, and it's far below, less than half of what we need to see, $60 a pound, to really incentivize a lot of exploration to bring more production online. So I've asked Will Thomson, he is the managing partner of Massif Capital, to come give us his thoughts on the uranium market. With that being said, Will, welcome back to the show. And what are your thoughts about the investment opportunities available in the uranium sector right now?
Hey, Bill, thanks for having me back, and happy to talk about uranium. I just got back from a trip to Kazakhstan to visit with the Kazatomprom management team. So I've been spending a lot of time on uranium lately. I think overall, the last year, it started to look like we were seeing a turn in the cycle. This year, it looks like we've sort of regressed a little bit. The macro or sort of industry setup for uranium remains quite positive. There's a widening sort of supply and demand gap. There is extremely long lead times for new mine development. Over the last 10 years, producers have cut CapEx by about 2/3. And as you sort of suggested, the current prices remain well sort of below what is needed to incentivize new production. So from an industry setup perspective, it's about as good as it gets, I think, for a commodity. For investors, though, I would say the landscape is a little more problematic. If you look out sort of in the uranium space, you sort of have these two big guys, Cameco, who most of your listeners are probably familiar with, the Canadian producer, probably the second largest producer in the world. And then you also have Kazatomprom, which is the primarily Kazakhstani state-owned uranium producer that listed in London last year. After that, you have a few small, what I would consider undersized producers who will certainly do well if the price of uranium really rallies, but may or may not make it until the price rallies. And then you have a lot of juniors with deposits. A lot of the deposits are quite interesting. There are several management teams that are quite strong, but if you look at the supply and demand, it really doesn't look like we need sort of new capacity to come online until 2025 or perhaps after that. And so from an investor's perspective, I think you have some speculative opportunities in the junior space where if you want to allocate a little bit of money to a potentially very high reward opportunity that may also be a zero. There are a couple of names, but in terms of actual investable companies, it's at least our opinion that your only choice is Kazatomprom. And there are a couple of reasons for that I'm sort of happy to go into.
Yes, and I should point out that Massif Capital wrote a investment review in January of this year on Kazatomprom, and I'm going to put a link to that in the show notes below so you can access that. You referenced, Will, one of the quotes in that report where you said Kazatomprom is the first investable uranium miner to hit the market in a decade. Could you elaborate on that?
Yeah, so when you look at opportunities, I think you can sort of look at how much downside there is, how much upside there is, and sort of the asymmetry between the two. And so we tend to think of there as being speculative opportunities. And this is particularly sort of relevant to the mining space. But we tend to look at there being speculative opportunities, which are sort of high reward opportunities, but significant downside opportunity as well. So there's the potential for a complete loss. And then there are sort of investable opportunities. And we look at investable opportunities as maybe not having the same upside as that speculative opportunity, but having sort of a much less downside. Ideally, frankly, from a valuation perspective, little or no downside. Whether that sort of works out in the market and after sentiment is taken into account with the equity prices, that's a different story. But asset value that is significantly asset value and future cash flow generating ability that is significantly in advance of where the company is currently trading. And so we've been following the uranium space for some time, and what we found is that, again, those juniors, there are some interesting ones, but we don't know how long we're going to have to wait. And so that is, there's a time issue there. If we've got to wait until after, say, 2025 to see a return, that could be quite a long wait. And that timeline might take a highly asymmetric return and convert it into a sort of a modest return on a compounded annual sort of basis. And then, you have someone like Cameco, which is what I would consider to be the sort of traditional pick in the space. But they have expensive production. They've got great mines, don't get me wrong, but their production is second quartile. They have no sort of first quartile mines other than the uranium mine that they have a joint venture on with Kazatomprom. Everything else is second quartile or above. And they have shut down McArthur River. And the timeline and cost to get that back up and running is significant. And the incentive price is probably more like $40 to $50 per ton. So, a good $10 above the long-term price and $15 above the current spot price. So overall, it looks like more of a bet. Much like the juniors, more of a bet on just a rise in the price of uranium because it's got very little growth potential and very little sort of ability to generate real free cash flow at the moment, other than through this sort of unique moment in time they've got right now where they can buy in the spot market and sell on their long-term contracts. Kazatomprom, on the other hand, has a very solid balance sheet. They're the largest producer globally with at this point, about 25% of primary production. They have the largest reserves in the world that are all mineable via ISR, which is a very sort of straightforward process that is quite sort of simple and easy to execute and very scalable. And they have a strong dividend policy. And I think that last one is quite important because, again, we don't know how long we're going to have to wait for the price of uranium to respond. And so in the meantime, we would like to buy something at a discount to its asset value that also pays us to wait. And that opportunity is Kazatomprom. And there isn't another opportunity like it at the moment in the uranium space. And it trades on the London Stock Exchange, which is a good exchange. They've got strong governance that is continuously improving. And so all around, it's a very interesting opportunity for someone who's interested in uranium, but doesn't want to risk, a zero, and is willing to accept the fact that perhaps it doesn't pop the same way a junior might. And so maybe they lose a little upside, but on a risk-adjusted return basis, we would view it probably as a better play.
There are investment managers and influential commentators such as Marin Katusa that says avoid AK-47 nations, which he refers to them as, at all costs, especially when it comes to uranium. What's your perspective on the concerns people have about Russia's control over potential control and influence over Kazatomprom and how that might affect your investment?
Look, Marin Katusa is a smart guy and a very successful investor, obviously. I would argue that his understanding of political risk seems to be somewhat limited based on what I've heard. Kazakhstan, at least from a political risk and a country risk or I guess to back up, I would say that when you start thinking about political and country risk, the most important thing for everyone to recognize is that the way we tend to see it presented is a very sort of inaccurate picture. And so generally speaking, if you start talking about it, someone's going to trot out a country risk index. This country is X, is sort of X on the list of 160 countries or something like that. It is very risky according to an IHS index of political risk. This is a very unproductive way to look at political risk. Political risk is about individual assets, it's about individual companies, and it's about how those individual companies engage with the government and the local population. So it is highly idiosyncratic to the company, the asset, and the people. So to talk about sort of AK-47 countries doesn't really capture what's going on when we think about political risk. There are companies who figure out ways to operate very successfully in difficult countries, and there are companies that do not. And so that means sort of by definition, political risk is not a country issue, it is a company-specific issue. In regards to Kazakhstan and Kazatomprom, what I would say is, look, 80% of the company is still owned by the State Sovereign Wealth Fund. They have several joint ventures with Russian companies, or primarily Uranium One, which is owned by the Russian state uranium company, whose name is escaping me at the moment. They also have several joint ventures with Cameco, Orana, which is the French sort of nuclear authority, and the Chinese. They have several joint ventures with the Chinese. So Kazakhstan sits there sort of right in the middle of everyone, has relationships with everyone, and is quite deliberate, at least the language coming out of the government is quite deliberate, in emphasizing that they want a productive working relationship with, at the very least, both China and Russia, but ideally China, Russia, and the United States. And so the level of influence that Russia has, I think, has been exaggerated, probably solely because of the history of the country and the fact that most people don't do a lot of work to understand what's been going on there in the last decade, I'd say. And if you do some work, what you find is that, in fact, they've had a growing relationship with the United States, and they've really had a significantly growing relationship with China. Now, does that mean they may fall under the sway of China as opposed to Russia? And is that hypothetically as worrisome as falling under the sway of Russia? That's certainly a possibility. But I would say that they have made it very clear that they would like to bring several more companies to several more government-owned entities, specifically in the oil and natural gas sector, the telecommunications sector, and the railroad sector, to the public market on Western exchanges. And with that in mind, they need to sort of toe sort of toe some lines and balance all these powers. And I think they appeared thus far to be doing it pretty well. Kazatomprom was the first company, state-owned entity, which they were going to IPO. Thus far, the IPO has been pretty successful. The share price has sort of just bounced around a little bit, but it's gone smoothly. Their sort of production of documents for investors has been comprehensive and smooth, and they continue to, in all our conversations with them, continue to emphasize the work that they're doing to bring up governance standards, alleviate ESG concerns, and sort of work on some of these issues that are important to transparency and Western investors. So I don't think you can view Kazakhstan in the same way as you might view a country that has more security risks, or a country that lacks the governance and development that Kazakhstan has.
We'll be right back after this word from our sponsor. Orin Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurinresources.com. That's AURYN resources.com. Well, I appreciate that articulation. You and I are both Americans, and one thing I think I should point out to the listeners is that you've served as a strategic and economic advisor to NATO in Afghanistan. And how did that experience help prepare you for that analysis that you just offered us?
That's an interesting question. I think that my experience in Afghanistan made it quite clear to me that a lot of the problems we think of as systemic and country issues are in fact often regional and people issues. Every time we went out to talk with someone or tried to deal with an issue in Afghanistan, and I dealt with a lot of corruption issues, and I dealt with issues related to the elections. It was always about convincing some group of people who did not in any way represent the country overall that this was in their best interests. And so I think that the idea of understanding who a company's stakeholders are and how the company is interacting with those stakeholders is going to be much more telling about the political risk that you as an equity investor are exposed to than any general sort of observations or overview of the economy of the country, the security situation in the country overall, and the sort of political situation.
How does our country's Section 232 decision regarding potential quotas for U.S. Uranium miners and how the uranium as a commodity is viewed for national security, how would that potentially affect the profitability of Kazatomprom?
So we were a little undecided about that internally. Section 232 had the potential in our mind to create this sort of interesting bifurcated market. The analogy we thought of was sort of the United States in regards to oil before we were allowed to export crude. And so you had that spread that existed on a sort of continuous basis, and still does, of course, between Brent and WTI. We viewed there as being a likely bifurcation in the market where domestic consumers for the roughly sort of 90 nuclear reactors that we have here in the United States would have to buy, say, 25% of the uranium that they were going to use at a higher price and in the United States, that price would probably be more like $40 or $50 a pound, just given the sort of cost of production, and that the offshore markets would probably trail that price, but we weren't really sure. In regards to Kazatomprom in particular, the United States represents a very small market for Kazatomprom. They are sort of, if you will, the primary producer for much of the rest of the world, and in particular China, and various other sort of secondary nuclear markets, although France is a pretty big one also. So their total exposure to the United States, I think, if I remember correctly, was about 5% of sales. So it didn't look likely to impact their operating results terribly, except in as much as perhaps they missed out on an opportunity because they just don't have U.S. assets. So we didn't view it as a particular as a great negative to Kazatomprom. Now, I will say that much of the U.S. Nuclear fleet is supplied with uranium from foreign countries. Kazatomprom probably has more significant exposure to the United States than that 3 to 5% or so of revenue that comes directly from the United States suggests. But because the nuclear supply chain is so long and frankly quite complex, it's probably obscured a little bit. But they still have China. They still have relationships with Russia, with France. They are, going to supply many of the new reactors that are being built in various emerging or developing countries throughout the world. So in the grand scheme of things, we didn't really think the impact would be all that significant. That being said, if the quotas if Section 232 had gone through and quotas had been something like, well, producers need to buy 100% of uranium from U.S. producers, I think there you would see more of an impact. But as long as that, whatever the result of the sort of current discussions are in the government are not something along those lines, we see the impact as relatively minor.
After your recent meeting with Kazatomprom management, do you feel more confident in your investment, and what were some of your key takeaways?
It's always good to go out and see these mines and to meet with management teams. It certainly increases it doesn't always increase conviction. In this particular case, it did increase our conviction. And I think a lot of that has to do with just seeing the process, seeing how deliberate, thoughtful they are about it, seeing how, frankly, simple the ISR mining process is and how scalable it is for them, and the effort they are putting into being transparent with their operations and efficient with their operations. They, as a state-owned entity, one is always worried about spending that is unnecessary or supports a political agenda. And I would say that Kazatomprom probably at some point in its history certainly fell under the sway of some of that type of activity. But as they prepared for the IPO, they made very deliberate sort of decisions about implementing lean production methods and sort of U.S. standards or international standards of governance. And they are slowly implementing them, and they are doing what they said they were going to do. And I think from a mining perspective, the best you can expect from a management team is for them to do what they say they're going to do. And when a problem does occur, they approach it and deal with it as sort of quickly and deliberately as possible. And thus far, management team has done what they said they were going to do, and they haven't had any implementation problems. So from our perspective, it's all sort of moving in the right direction. Seeing the country of Kazakhstan was great. I think a lot of people would be very surprised if they went there. if for no other reason than you hear Kazakhstan and you probably think Afghanistan or Pakistan because of the sort of root word, and so there's probably some assumptions about what it looks like, what the nation is like, and I would suggest that most of those assumptions are probably just plain wrong. I was in Shymkent, which is the third largest city in Kazakhstan at the end of my trip. This is a city of about 1 million people. There are cafes and people are drinking coffee and chatting, and people are on their cell phones, and everyone's got a cell phone, and everyone's got, there's Apple is advertising, there are iPhones everywhere. So everyone's driving cars and taxis, there's Uber, every luxury, frankly, that I enjoy in Charlotte, North Carolina, I was also able to enjoy in Shymkent, the third largest city in Kazakhstan. So I suspect, now if you go outside some of the big cities, it is obviously, there is poverty and things of that nature. But it is fast growing. The population is growing. It is peaceful. And although I wouldn't consider it a democracy, because it's not, it is a soft autocracy that the people appear at the moment to, at the very least, tolerate, and in some regards respect a great deal.
Well, in our last conversation, we had talked about how your fund is invested in Cobalt 27, and you were not happy with the proposed takeover by Paula Investments. Since that conversation, the terms of the deal were changed, and just a few days ago, last Friday, Cobalt 27 announced that they had passed the updated terms. What's your perspective here? What does your fund plan to do with your current investment in Cobalt 27?
Yeah, so we, look, the deal passed. They got the votes. I don't know where they got them. They got them. So there's very little we can do at this point. We're still not thrilled with the offer. I think that we've done some sort of back of the envelope math. And if you look at sort of what the price of nickel and the price of cobalt has done since their initial offer, and you look at their stockpile of physical cobalt and sort of the value of the Vosi Bay cobalt stream, the new offer was just an increase in the cash portion that is sort of equivalent to, or roughly equivalent to, countering what has happened in the price of cobalt since the offer. So it's a 3% improvement overall and an improvement in the cash position. It still leaves shareholders at the end with this nickel 28 stub, which, we think it's worth something, but the time it'll take for it to be worth something is probably quite long. And in order for it to be anything but a passive portfolio of streams that we are waiting for, will require them to raise a significant amount of capital, probably diluting the existing shareholder base, pretty significantly. So, look, they improved the cash offer, which is great. For my fund, it's good because we were in at less than $4 a share, but that's not the case for everyone. So, we're not thrilled with the offer, but we've accepted the situation. We're going to look to sell the nickel 28 stub, I would imagine, at whatever we can get, sort of best price. Now, what that best price is on the first day of trading, that's going to be an open question. The implied value in the offer is, I believe it's about $1.92 now at this point. But of course, in the market, it's more like 55 cents. So that's a pretty wide spread. And I don't know where it's open this morning. I'm not in front of my computer at the moment, but maybe it's rallied a little bit. But either way, it's well below the implied offer price, and so we don't imagine anyone's going to actually get this, $5.75 offer, $5.92 offer, I guess, overall. But they got the votes. So we'll take our $4. We'll take the stub and sell it and see what we can get. We'll keep an eye on the stub. I think the stub is worth keeping an eye on. But frankly, in a somewhat similar way to the uranium juniors, it could be a really long wait before it becomes anything. The streams that they've got in there, the nickel streams primarily, some of them could be quite big. They do have a stream on Royal Nickel Corp, RNC's Dumont project. That could become a very big deposit. But RNC is now focused on their gold project in Australia. So, they've taken the eye off that ball, if you will. So it could be a very long time. But the situation is what it is. We have to take what the market gives us.
Will, thank you for your insights. If you want to learn more about Will's fund, go to Massif Cap. That's MASSIF as in Frank, CAP as in Paul.com. Will, as always, I appreciate your insights. Thanks for joining me today.
Happy to do so, Bill.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of high-grade copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion, with a 33% internal rate of return. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well-capitalized, has no debt, and possesses strong institutional support. Trilogy trades in New York and Toronto under the ticker TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.